Stock of the Day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
And our stock of the day is Amotiv. The automotive equipment manufacturer is holding its AGM today. It's introduced an updated Amotiv 2030 strategy. Well, there you go. It goes a step further to what we've been talking about, 2029. It's taken it out another year. We've reduced and simplified strategic priorities. These include growing global niche for its lighting and power business, as well as building a four-wheel drive accessories and trailering business. It's delivered revenue up marginally 1%, although underlying EBITDA was lower by 1% compared with the prior year. Gross margins steady at around 44%. The board delivering a final dividend of 22 cents a share. Total dividend for FY25 at 40.5 cents a share, double the size of its FY21 portfolio, and achieved $1 billion in net revenue. EBITDA margins at the upper end of its 17 to 20% range target there, and diversified revenue more than 15% now comes outside of Australia and New Zealand. Richard, let's start with you.
Well, I mean, I know this stock better as GUD Holdings, but I would say that they can go out to, that extra year, that extra confidence is because their profits, their earnings don't change much. So if you look at their dividends, they've pretty much remained the same for the past few years. So I think they could have even gone out to 2035, to just thrown it out there. But it's definitely a difficult business because car manufacturing has gone by the wayside in Australia. So they're very much price takers or distributors. But their margins are double digit at the EBITDA level, I think. Look, I think it's just one of those stocks that's a good core position in your portfolio if you think that they can keep paying dividends. Like, it's pretty much a kind of a bond type returns. So I like it's not something you would sell, but you could use the dividends, I think, to definitely bulk up your portfolio.
So a hold.
Yeah, look, it's a tough one. I mean, obviously, you've got Bapcor going through some real issues in that automotive space, and these guys, reading that AGM address today, use the word challenging to describe their environment like 3 or 4 times. It's not doing as bad. They came out with their first quarter update, 3% revenue growth, and sort of maintained the earnings guidance they had. But nonetheless, I mean, as an investor, it's hard to sit here with any great sort of inspiration when you've got 3% growth, less than inflation. The management team saying things look challenging and we need to put in a plan, that extends out 5 years with regards to sort of building a transformation. I don't sort of have a great view on the automotive industry. Obviously, EVs disrupting that a little bit. Like I said, Bapcor's going through its issues as well. I think this is a tough one. That divi yield does give you a little bit of support, but probably not enough for me. I mean, I just think there's better places to be. This is one where it's done okay in the past, but we flashed up that 5-year chart before. It's really gone nowhere for 5 odd years. Your dividend's sort of your only source of return. So I reckon this is one that I would actually just move on from and exit this one and find something else that maybe just has, doesn't have the same headwinds. It's hard in this game to own things that are going to sort of struggle operationally over the next year or two.
That is a hold and a sell for our stock of the day, Amotiv.
The Stock of the Day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.